In the summer of 1694, the English government was broke. Not struggling, not under pressure, broke. King William III was fighting a ruinously expensive war against Louis XIV of France, and the treasury had simply run out of money. Soldiers were going unpaid. Ships sat in harbour because there was nothing to fund their provisions. The government had already borrowed from every traditional source available, goldsmiths, merchants, wealthy individuals, and had defaulted on enough of those loans that almost no one was willing to lend anymore. The most powerful Protestant monarchy in Europe was financially paralysed. A Scottish merchant banker named William Paterson had a solution. It was elegant, unprecedented, and slightly mad. He proposed creating an entirely new kind of institution, a bank that would lend the government £1.2 million at 8% interest. In return, the subscribers to this loan would be incorporated as a single entity, the Governor and Company of the Bank of England, with the right to issue banknotes, take deposits, and conduct banking business. The government would get its money. The subscribers would get a guaranteed return backed by the state, and England would get something it had never had before: a permanent, institutionalized mechanism for funding national ambitions. That institution, founded in 1694 in a livery hall in the City of London, would go on to finance every major British war for the next 2 centuries. It would fund the Royal Navy that ruled the world's oceans. It would underwrite the expansion of trade networks that stretched from India to Canada to Australia. It would help build the largest empire in human history, not with armies, with credit. This is the story of the Bank of England, the bank that financed an empire. To understand why the Bank of England was so revolutionary, you have to understand how governments paid for wars before it existed. The answer was badly. Medieval and early modern monarchs financed warfare through a patchwork of unreliable methods. They taxed their subjects, always unpopular, always politically contentious, and never fast enough when armies needed paying today. They borrowed from wealthy merchants and bankers, but lenders demanded high interest rates to compensate for the very real risk that a monarch might simply refuse to repay. They debased their coinage, mixing base metals into gold and silver coins, effectively stealing from everyone who held money and triggering the inflation that invariably followed. The fundamental problem was credibility. A king who needed money desperately had every incentive to promise generous repayment terms and every incentive to default once the crisis had passed. Lenders knew this. They priced the risk accordingly, demanding interest rates that made large-scale borrowing prohibitively expensive. This placed a hard ceiling on how much any government could borrow, and therefore on how ambitiously it could act. England's great rival, France, had more land, more people, and more raw resources. By any traditional measure of power, France should have dominated the 18th century. What England had that France lacked was a solution to this fundamental problem of government finance. And that solution was the Bank of England. The bank changed the equation by making English government debt credible in a way it had never been before. Subscribers to Bank of England stock had every incentive to ensure the government repaid its loans. They were the lenders. The bank itself had every incentive to maintain the government's creditworthiness. And the government, for its part, found that the cheaper it could borrow, the more it could borrow, and the more it could borrow, the more it could do. The system was self-reinforcing. Credibility generated cheap credit. Cheap credit enabled ambition. Ambition, successfully executed, reinforced credibility. The Dutch had pioneered elements of this system. England borrowed the idea, refined it, and deployed it with a consistency and discipline that transformed it from a financial innovation into the engine of empire. The Bank of England's history is inseparable from the history of British warfare. Every major conflict of the 18th and early 19th centuries was financed through the bank's machinery of government debt, and every successful war expanded both British power and the bank's institutional authority. The War of the Spanish Succession, fought between 1701 and 1714, was the first great test. England needed to fund expeditionary armies in Europe, maintain a naval presence across multiple theatres, and subsidize Allied powers simultaneously. The Bank of England organised the borrowing that made all of this possible. The Treaty of Utrecht that ended the war gave Britain Gibraltar, Minorca, and crucial trading rights in Spanish America, the foundation stones of global commercial dominance. The 7 Years' War of 1756 to 1763 was even more consequential. Fought simultaneously in Europe, North America, the Caribbean, West Africa, India, and the Philippines, it was in a meaningful sense the world's first genuinely global conflict. Britain emerged from it having eliminated France as a power in North America, established dominance in India through the East India Company, and secured a naval supremacy that would endure for a century and a half, all of it funded by debt organized through the Bank of England. William Pitt the Elder, the minister who directed Britain's war strategy, understood the relationship between finance and power with exceptional clarity. He used British naval superiority to strangle French trade, cutting off the revenues France needed to fund its armies. Meanwhile, he deployed British credit to subsidize Prussia and other allies on the continent, letting others do the land fighting while Britain secured the colonial prizes. It was a strategy that could only work if you could borrow at scale, cheaply and reliably. The Bank of England made it possible. The culminating test came with the Napoleonic Wars. Between 1793 and 1815, Britain fought France almost continuously across 2 decades. The cost was staggering. The national debt grew to over twice the size of the entire British economy. France, under Napoleon, had military genius, interior lines of communication, and the conscripted manpower of most of continental Europe. What it could never match was British financial endurance. Napoleon could win battle after battle. He could not outlast a country that could keep borrowing indefinitely to keep fighting. At Waterloo in 1815, the guns were British. So was the credit that had kept them firing. The bank's role in building the British Empire went far beyond simply funding wars. It sat at the center of a financial ecosystem that made Britain the indispensable hub of global commerce for more than a century. The pound sterling, backed by the Bank of England's gold reserves and the credibility of the British state, became the world's first true reserve currency, the dollar of the 19th century. International trade across the globe was denominated in pounds. A merchant in Buenos Aires selling beef to a buyer in Shanghai might settle the transaction in sterling bills of exchange drawn on a London bank. British capital, funneled through the City of London's network of merchant banks and insurance companies, Lloyd's of London underwriting the ships, Barings and Rothschilds organizing the loans, financed railways in Argentina, cotton mills in India, cattle stations in Australia, and mines in South Africa. This financial infrastructure gave Britain a form of power that was less visible than military force, but in many ways more durable. Countries that borrowed in sterling, traded in sterling, and held their reserves in sterling were economically dependent on British financial institutions in ways that no army needed to enforce. The British Empire at its peak was partly a territorial empire of colonies and possessions, and partly a financial empire of credit relationships, trade dependencies, and monetary influence that extended far beyond the formal boundaries of British sovereignty. The Bank of England stood at the centre of this system as what Walter Bagehot, the great Victorian financial journalist, called the lender of last resort. When financial crises threatened to destabilize the system, the bank intervened, lending freely to prevent panics from cascading into collapses. This function, now standard practice for every central bank in the world, was pioneered by the Bank of England across a series of 19th-century financial crises, each one teaching the institution more about how to manage the systemic risks of a complex, interconnected financial system. The empire the bank helped build was vast, profitable, and built on violence and exploitation that its financial ledgers recorded with calm neutrality. The slave trade, one of the most profitable enterprises in 18th century Britain, was financed through the same City of London networks that the Bank of England anchored. Sugar plantations in the Caribbean, worked by enslaved Africans, generated returns that flowed back into British capital markets, funding further expansion. When Britain abolished slavery in 1833, the government borrowed £20 million through the bank to compensate slave owners for the loss of their human property. The enslaved people received nothing. The financing of colonial extraction, the systematic removal of wealth from India, from Africa, from the Caribbean, passed through British financial institutions that treated it as ordinary commerce. The Bank of England did not distinguish between a loan that funded a hospital and a loan that funded a punitive expedition to seize Indian tax revenues. Money was money. Credit was credit. This is the uncomfortable truth at the heart of the bank's history. The same institutional genius that made British government finance more reliable, cheaper, and more powerful than any competitor also made it the most effective engine for funding imperial violence and exploitation that the world had ever seen. The Bank of England is still there. On Threadneedle Street in the City of London, in a building that has occupied the same site since 1734, the institution that William Paterson conceived in a moment of financial desperation in 1694 continues to function as Britain's central bank, setting interest rates, managing the currency, acting as lender of last resort in crises. The empire it helped build is gone. The formal territories have been decolonized, the sterling area dissolved, the global financial supremacy of London eclipsed by New York and now challenged by Shanghai. The pound is no longer the world's reserve currency. Britain is no longer the world's workshop or the world's banker, but the model the Bank of England pioneered, the central bank as the institutional backbone of national financial power, the mechanism by which a state can translate its creditworthiness into military and economic capacity, is now universal. Every significant economy on Earth has a central bank. Every one of them owes a debt, acknowledged or not, to the institution founded in a livery hall in London in 1694. Empires rise and fall. The institutions they build to fund themselves sometimes last considerably longer.